We have a nice mix here now of funders, both Irish, domestic Irish and international, and also an international developer as well, a user of those funds. So we should have a nice conversation in that context. So the money slot of the of the conference, the previous speaker that referred to bankers throwing wads of 50 around the stage. I'm not sure if the guys have brought their wads with them. I don't think there'll be that type of Wolf of Wall Street behaviour, but we'll get some insights from them in any event. So I think actually in Gabriel's address, the comment from Mark Carney really resonated about the requirement for a massive reallocation of capital to achieve this net zero target that we have to achieve. It was really relevant, obviously, in the context of this panel. I think it's been estimated that 125 billion euro of capital will need to be deployed to achieve and to be invested in low carbon technologies and renewable energy infrastructure to achieve Ireland's climate action plan objectives by 2030. That's just in Ireland, so that's an enormous amount of money, and that's not going to be sourced just from within our own resources. That's going to require investment both from Irish investors and internationally. And clearly, whilst there's a clear sort of societal and environmental imperative to make this investment, banks and investors and pension funds, also have to behave in a fiscally responsible and prudent way, as well as an environmentally friendly way. And funders have to make an assessment of the risks and the return from projects and technologies and industries as well. So getting that balance right between all of that's really, I suppose, what we're going to try and get to the bottom of here in our conversation now. So I suppose maybe, Eoin, starting with yourself, in the context of the wider sort of economic environment that we find ourselves in, everybody's aware of the challenging conditions that are coming and the headwinds that we're facing into. I suppose in that context, are you still confident there will be debt financing available for the development of these projects that we need to do to meet our sustainability commitments?
Yeah, look, I think there is. I think we've heard a number of people say today, there's a ample liquidity across the capital stack, and I think that will continue to be the case. I think we are hitting a number of headwinds, and if I look at if and when new opportunities come across our desk, I think a couple of the things that we're currently looking at in the environment, or in this current environment, we're looking at, number one, at the volatile interest rates, and looking at the viability of the project as a result of that volatility, because you have to remember bids are put into res, and by the point in time it may go from bid to offer to final offer to financial close. There's a significant period of time there, and I think all we have to do is look at the res 1 projects to see there is in terms of, it was an interest rate environment where people were prudently modelling zero. I checked my emails this morning to see where we are in terms of interest rates, noting that the ECB looks like they're going to flex them again, and it's another 30 basis points increase as of this morning on a 5-year interest rate swap. So you're looking at from a 0 to 2.3, 2.4% this morning. That's not talking about bank margin. So look, I think that is something which is exceptionally volatile at the moment. It needs to be considered. I think the liquidity, the ample liquidity there should ensure it can be mitigated. I think the sophistication of equity in developers but it is something that carries a risk up front for developers, and I think it's not acknowledged. Similarly, and look, this is going straight into the usual. It's nothing innovative on my side, but again, if we come back and we look early days at an opportunity and the viability of a project, you're looking at a complete mismatch between your revenue line and now your OPEX line. So you are, there's zero inflation on your revenue. You're looking at your OPEX, which is largely tied to your operation and maintenance, and you're looking at inflation and running at, maybe, well, what is that inflation number? I'm not going to throw out a number, but it's again, that threatens debt serviceability in terms of your cash flow, and it's stuff that needs to be considered, and it's that passage in time from bidding to res through to financial close, where the SPV, the project, the developer is taking that risk. There's no risk sharing kind of under a res regime, which is what we may see kind of on a public-private procurement where there is a risk share. And I think, that can be detrimental. And we're certainly in kind of one of the most volatile states we've been in kind of my 10, 12 years in this sector.
Okay, very good. Excuse me. Cyril, as an international investor and actually a developer with the honour of having connected the first ground-mounted solar project in Ireland, which is a project in Millvale and Wicklow, what do you see any particular challenges or things that you feel are going to need to be addressed just in that high level environment where you're looking at raising finance?
Sure, international but local. I'm living in Dublin, to be clear. To be honest, this is probably the easiest panel, so thank you very much for inviting me to that one. ESG was probably much more delicate, as well as developing offshore wind farms in Ireland. About the financing in Ireland, of course, we are in a much more complex environment than we were at the time of RES 1, at the RES 1 bid. I'm not talking about the RES 1 delivery, but at the time of RES 1 bid, we were all very optimistic. We had exceptional low prices for the supply of solar modules. We had very low interest rate. And when we see all what we went through to connect to the grid of our first solar farm, I mean, a lot of things happen. And touching to a couple of few points, the maritime routes to import our solar modules, it's a good example, has been knocked a lot by the impact of COVID. So we had to transport our solar modules through Russia by train for some at some point, and it's not possible anymore. So I mean, the transportation has been hit a lot, as well as the supply chain. All the countries around have currently a very aggressive politic in terms of building more renewables, and so the developers are struggling now to find their solar modules, to find their turbines. And of course, this is a situation in which we are right now at the time of RES 2, and so we are bidding with much more uncertainties. At the same time, even more than RES 1, we feel the strong support of the lenders, so of the financials. I'm not saying that because I'm with the potential lenders here, but we really do feel this appetite for the sector. But we have to bid in a much more uncertain world, and we need to keep a bankable sector to make sure we'll go forward.
Okay, very good. Yeah, obviously, for Ireland as an island, those supply chain challenges actually are quite acute for us as well, in particular. And Justine, you have an interesting perspective here, because as well as being a lender active in Ireland, you have quite a wide remit across Europe and the Middle East as well. And actually, it was the funder of that first project to be connected, solar project. There's a lot of competition. Whilst there's a lot of funding out there, there's also a lot of competition for that funding. Are there any particular challenges for Ireland in that context, in sort of attracting funding to projects here? Any particular challenges or any issues that you see particularly relevant?
Well, it's true that as an international funder, you will also compare with other countries and similar schemes. For instance, an obvious one would be comparing to the UK CFD. So, of course, there are a few things which are a bit less favorable. For instance, the fact that it's not indexed, or maybe the fact that there is this COD long stop date, where actually the developer has to take the grid connection risk. And as a lender, usually we don't really like when things are outside of the control. So, but RES 1 has been a great test because it has shown that it's bankable. So lenders just have to take the specificities of the Irish feed-in premium and just see what they can do around this. So, for instance, this non-indexation, lenders will just look at in a way that they want a bit more buffer, in case of inflation, which is not in line with what we expected at the time of looking at the financing.
Yeah.
For this COD long stop date, we would look, for instance, at making sure that there is sufficient buffer and making sure we're comfortable enough with the construction timeline and that in case of delays we can actually be sure that the developer is not going to lose this feed-in premium. So basically there are a lot of risks also that lenders are now familiarized with. So for instance, there used to be a focus also on curtailment, negative prices, and we got familiarized looking at other projects elsewhere. So Ireland is definitely a market that is still really attractive, and as an international funder, we would just try to basically structure the financing around these specific issues.
Okay, very good, excellent. So maybe actually to delve into some of those challenges in a little bit more detail. In the poll that Eoin and Peter mentioned earlier on, we also had a question asking respondents what they viewed as the biggest risk for investors and financiers looking at funding renewable energy projects, and actually over 80% of the respondents identified policy risk as the greatest risk. Risk of policy not being sufficient, obviously change of policy, and so you touched on RES and the RES support. That's one particular area, obviously, that's very important and dependent on maintenance of government policy around that. Is that something, in particular that, you are satisfied with, how it's operating? How have you seen it evolve, maybe even between RES 1 and RES 2?
I'm not sure I'll be as politically correct as the panelists in the offshore round. So if I go back to their question, which was how optimistic are you about the 2030, the achievement of the 80% renewable electricity by 2030, I have to say it's that way. With the current framework, we won't make it. Let's be clear. Paul rightly mentioned it. We've got projects that were awarded a connection at ECP to the 2 a year ago. And we are only now starting the engagement with the DSO and the TSO on part of the project to get a grid offer eventually for Q2 2023. A year and a half to know where we'll connect, at what cost, and by when. So with the current framework, no, we won't make it. Let's be honest. And I don't think I'm not an optimistic person. I mean, ask me about the Rugby World Cup next year, I'll be very optimistic. So that's really a question of, and to continue being optimistic, there is things we can change. And I see a lot of consultations ongoing currently at the government level on the private wire, hybridization. So there is everybody's conscious that there is a big issue currently. We won't make it if we do not change things. And the DSO and the TSO are working on that. So I don't need to speak about the planning and the grid. If we stick to the question of the financing, which is the purpose of that panel, and we see what the impact of the current financing cost on the RES auction, we've made a very simple calculation between RES 1 and RES 2. What was the impact on the tariff in euros per megawatt hour of the increased interest rate? We're not even talking about the banks taking more margins, we're just talking about the simple mechanical impact of the increase of interest rate. We're talking about some 16 euros per megawatt hour. So from an average price at RES 1 at 74 euros per megawatt hour, without talking about supply chain, without talking about all of that, mechanically speaking, we were increasing the cost of producing renewable energy to at least 90 euros per megawatt hour. So no surprise that the average price at RES 2 was closer to 100 if you impact on top of the financing costs all the rest of the contracts. What would be very important to not lose the bankability of the Irish sector in terms of challenge we'll have in the future, and it has been mentioned many times today and by Justine right now, will be the grid challenge. And it will go worse if we do not again work on the policy. More and more the project will face increased curtailment and constraints, and more it will make the lenders worried about at what point it will become unsustainable and not bankable. So this one will be a critical one. Another sector we've not discussed much today, we've focused more on the onshore wind farm, solar and offshore. We've touched a bit to the point of the batteries. Financing batteries in Ireland currently is non-possible. It's not possible for new projects. Some project developed a couple of years ago benefited already for some support and are being built. So we are having things in the newspaper showing new batteries being built. That's fantastic. But there is currently, we are going through now a couple of years where it will be very difficult or impossible to finance a battery because there is no visibility from 2024, 2025 on what will be the mechanism to remunerate all the services we will need to have a grid with zero emission. And if we want to have, it was 70, it's now 80, and we all want to have 100% renewable energy on that grid, it will go through a massive addition of batteries. And so we could become at some point late on the development of those batteries. Finally, to go back on the question of the appetite for lenders to the Irish market and having that eventually view as international and local developers, what's very positive is that from RES 1 to RES 2, and despite the fact that on some aspect RES 1 has not been completely a success, when we see the delivery rate of RES 1, there is some questions still about that. We see the lenders with even more appetite on RES 2 than they were on RES 1. In particular, we see local banks much more aggressive on RES 2 than they were on RES 1. And it's interesting to understand, so eventually that's a question for you, if it is because solar technology was new in the Republic of Ireland and now, I mean, we've delivered it and the lenders, the local lenders are much more comfortable to go for this as they were already on the wind for decades. So that will be an interesting point. The last challenge, and again, that's a question for the banks, Ireland competes with, so we are talking a lot about a collaboration between all the countries and in Europe around that energy crisis, and I think that's crucial to keep that collaboration. We will not be here if there was not that support, European support, but at the same time, we've got to understand that all the countries are making major steps forward to renewable energies, and we'll be all competing for resources, for the supply chain, for human resources. I mean, we are all struggling to hire in all the countries, so we'll be struggling for those human resources. And it's an open question, eventually for financing. As of today, there is an appetite, a general appetite for renewable energy. If Ireland does not manage to keep a very interesting environment with a scale, with not political risk, there is no political risk, but uncertainty in the policies, could at some point those lenders, already very busy financing everywhere in Europe, turn to other countries.
Yeah, okay, very good. Okay, thanks, Cyril. Yeah, so the policy certainty is very important in that regard then. Louise, I suppose we've been chatting there about sort of some big macro issues. As well as that, there can be very nuanced and specific issues that can have actually a very material effect on financing and it's been touched on already, the treatment of constraint, for example, in the system that actually can have a real significant impact on the bankability of a project, and there's some sort of issues around it at the moment, I know, for funders. Is that something you've seen, really cause a difficulty in looking at the financeability and bankability of projects?
Yes, Will. I think policy certainty, as you say, is the common theme here. When we're looking at projects, certainly looking at issues like curtailment and constraint, big problem. Curtailment and constraint are not the issue in itself, but it's just receiving the strong signals we need from whether the regulator or the government in terms of how we should look at these issues going forward. As bankers, we tend to adopt models, or our lending models look at 15, 20 years. And if we have fundamental uncertainty, whether it's regarding how projects will be curtailed through a grandfathering scheme or pro rata, or whether it's how they will be remunerated for that curtailment, if we have fundamental uncertainty about that, that makes it very difficult for us to make sound lending decisions on the back of those projects, right? So ultimately what it leads to is it leads us to take more conservative views on those deals. And that's not a good thing, because a more conservative view means less debt, means a higher cost of capital for the developer. And what's that going to mean? It's going to mean that developer at the next res auction going in, bidding higher, bidding higher, and bidding higher is higher energy prices for the consumer. So I think on the subject or on the theme for today is that call to action from whether it's the regulator, the government, to make sure that these policies, whether it's the implementation of the clean energy package and all the things that will come out of that, which certainly very positive things, needs to happen. It needs to happen quickly so that us as bankers can perform our role and can provide that clarity, or have that clarity with which to lend money, and that's super important. Curtailment's one of them. Certainly a common theme. I was thinking, just on my way here today, I know there's one in particular. I know, for example, the first res scheme that we had introduced the requirement for performance bonds. That was a big theme. We didn't have that before. I'm not against performance bonds as per se. I think they're a good way of making sure that you keep speculators out of the market. But I don't think a lot of thought went into how those bonds would be procured. Does the Irish market have a number of bond providers that can provide all these type? And I can tell you that even it's just something that hasn't been thought out properly. And even on the last day of that deadline, by which a number of bonds needed to be procured, a whole bunch of non-AIB customers would have been ringing the banks and asking, could this kind of stuff be procured in 24 or 48 hours, which is typically not very possible, right? Yeah. And it's a problem, because I know for a fact that a number of projects were not able to secure these bonds in Res 1, handed back their offers, and it wasn't through lack of funds, it's just through lack of a proper infrastructure and clear vision, clear policy and direction from the people that are drafting the policy to know, are the things that we're asking for, can they be delivered?
Okay, very good. That type of cliff edge sort of panic that you don't want at the last minute. Just in relation to that point around constraint and application of the rules, Muireann, just the current legal position around that, and just how that's managed. What is that current sort of framework?
So Luis obviously touched there on the grandfathering position that's developed in the last number of years in the Irish market, and I suppose that's derived from Articles 12 and 13 of the 2019 directive, which introduced a distinction in treatment for pre-2019 and post-2019 projects. That was then implemented in Ireland following a lengthy consultation with plenty of robust submissions. And a further distinction then was made between whether a project would deem to be firm or non-firm. So really, I suppose, as we're looking forward, I wouldn't say that there's a strong potential for any material change there. Unfortunately, I think that if there are to be any successful challenges to the implementation as it's been carried through in Ireland, that's likely to be around the firm versus non-firm and whether projects are going to be compensated for their constraint or not. Okay. Unfortunately, then it comes back to the earlier point that I suppose some of the panellists here have touched on, which is the strong need for investment in grid infrastructure, and really that is kind of where we're going to see the material change in the constraint approach going forward.
Actual physical infrastructural investment as opposed to changing of the rules.
Exactly.
Very good, very good. Eoin, someone with quite a bit of experience lending in the Irish market, and in fact, Bank of Ireland was the Mason and Curran client on my first renewables energy project about 20 years ago. Say you were in primary school, you're remain much more fresh-faced than I am, but you know, having that sort of long perspective on the market, is there any particular characteristics about the Irish market that produce challenges for lenders, like it's a small market, for example?
Yeah, I think it is, and I think look, Cyril touched on it as well, and it comes back to scale. And if we look at kind of where we are today, and again, you know, this has been mentioned throughout the conference, it's mentioned in absolutely every conference you go to, is the level of liquidity there, you know, and being honest, I think my MD thinks I'm making up bank names at this point in time when I have a sit down with them on a monthly basis, and I say, well, there's now 10, 12, 13 funders bidding on term sheets. Kind of, but I think that's there because people see scale from the outset, and they see the grand ambitions of Res 1, and it's not just the funding side, I think it's the equity side as well. People can begin to see the scale, and when you see scale, you can build a business plan. You can invest in it, you can invest in that geography. And unfortunately, where we sit today, we look at Res 1 and there hasn't been a huge amount deployed out of Res 1, so there hasn't. We're sitting here in Res 2 and it's volatile. It's how much is going to be deployed. So I think is in terms of
slow to get to finance.
It's slow. It's very slow. And I think even if you look at what we are bringing through, you know, we're bringing through stuff which, you know, kind of is in the Irish context, and it is difficult, and we have to remember we are in a small island, but we're bringing stuff through that we would categorise as large projects of 60 to 80 megawatts, which, you know, if I turn to my right and I ask you guys, is that large? You know, I think you would probably, you know, smirk, and it's absolutely not. It's a one funder project. So it is. So I think that's the challenge. It is that scale. It's delivering that scale from the outset. It comes back to policy, so it does, and policy being fit for purpose, kind of, but is in kind of, if we do have multiple auctions whereby there is not going to be an uptake, that the business plan quickly erodes. You know, funders will quickly, you know, pack up and go, and I've seen it before, so I have kind of, and I think equity will as well, and then we will be left with, it's private industry is driving the growth of renewables, and we will have less and less people. We will have less capital. We will have less bank debt and competition, which is ultimately, you know, designed a CFD, which is designed to drive down the price, and that won't be the case, unfortunately. So I think it's we need to address that scale. Kind of, I think Philip mentioned it, you know, kind of in the previous session. It takes a long time to do things. That needs to be addressed. It really does.
Yeah. Okay. Very good. And Justine, maybe with that international perspective then as well, we've heard a lot about some of the challenges here. Does a lot of what you hear sound familiar to you in the context of other markets as well, or are there any, you know, quite specifically Irish things that you've seen that you think sort of produce challenge lending into the market?
Well, actually, I'm very aligned to my fellow banks, actually, whether from an international or local perspective. I think we agree that it's the same issues that need to be structured around and discussed. So I think we are very much aligned here. But yeah, for now, Ireland still is attractive, but there is this issue of scale, because if it is just one small project for a bank, it's so much work that is it worth it? So we need to also have some kind of sizable project to finance. And yeah, as I said before, a few of the challenges is, you know, when you compare to other markets, what are the weaknesses of what is proposed? So, for instance, the feed-in premium, and we just discussed all the different risks. But still, Ireland stays, you know, Res 1 did show that there was appetite, and Res 2 as well. So it's still a very attractive market for bank. Right. But I think banks are also following up very closely what are the trends and how it's going to develop, and also, you know, on other sectors like ORES. what
offshore,
what is going to be done there as well to make sure that any offshore projects are actually financeable as well.
Yeah.
So I think there is a lot of
and that's an opportunity, of course, obviously, to address maybe that scale issue. That's a place where Ireland can actually develop a pipeline of a lot of very large projects, obviously with the abundant resource surrounding us.
Yeah, and I mean, if you look at that and you look at that scale and the pipeline, and sometimes it's about being creative as well. And it's we look at kind of like in Ireland, we've been doing wind for 20 odd years, and certainly we as a bank have, and we've been doing it through AER to Res 1 kind of, and hopefully Res 2 at some point kind of. But you know, kind of we look at a lot of stuff in the AER schemes, in the refit schemes that would have been considered kind of first-in-class sites that have 250 kilowatt, 500 kilowatt turbines. And we need to see a blueprint for how they repower and not how they repower, removing the risk of planning. Kind of appreciate it's probably not the best time, they won't want to repower at the moment, but hence why I use the word blueprint. But I think we need to see that because, I mean, if we looked at, and it's a piece of work I'd love to actually just do myself and see kind of how, if you take the 250 kilowatt, 500 kilowatt and you're replacing with a 3 megawatt, that's a substantial increase in capacity for infrastructure which is already in the ground but may just need to be upgraded. So I think that's something that needs to be given a bit of thought to, because it is a good opportunity.
Very good. Just to remind everyone as well at this point, Slido for questions, and we'll pick those up then at the end of the session as well. And we've sort of spent a bit of time here now talking about the challenges that we see lending into the sector. Maybe as well then to look at the opportunities. Eoin, maybe just for yourself as well. Do you see are there opportunities for easy wins, to improve conditions?
Yeah, I unintentionally gave a very good segue into that with the repowering. I should have saved it for this session, so I should have. But hindsight's a great thing. No, look, I think there is, and it would be very easy to sit up here and kind of ridicule policy, because let's be honest, the last 3 years that we've seen in this world, it's absolutely changed. The world has changed, kind of, and then the current geopolitical situation, it's good to hear, Justine mention kind of that, from a international perspective, they're still looking at RES, and huge amount of developers, huge amount of funders look at RES, and RES is very good, as was Refit 1, Refit 2. I think it's how we make amendments and how we tweak for the current environment, and I think that's how a policy will be judged, and coming back to the scale and achieving the scale of, we want to deliver X megawatts in RES 1, we want to deliver X megawatts in RES 2. The passage of time in the current environment we're in is exceptionally volatile. Something that was fit for purpose 3.5 years ago may need to be tweaked. Doesn't have to be materially changed, but may need to be tweaked. And for me, a couple of them, look, again, the easy wins, kind of, Justine mentioned it, is the long stop date. Kind of, we had 18 months of a construction shutdown, so we did kind of, supply chain issues, and having a cliff edge, long stop date really does not make sense if what we're trying to achieve is decarbonisation and putting renewables on the system. It doesn't. So kind of, I think, kind of looking at that and kind of bringing the amendment kind of to the forefront, kind of, we don't really have to look far. You look across the water to the UK and, you can see, obviously, there's not the same hard kind of long stop date on energisation on the back end. Developers can elect kind of to defer their res and go into a merchant nose period, kind of, and kind of, some people may say that's, kind of, it's not what we want from a CFD because it's given 100% upside to the developer. But, I'm pretty sure those Res 1 developers need upside, because when they sat and built their business case, they did not envisage the 3 years that we're sitting here kind of at the
cost increase happening in the meantime.
Exactly, and the rates going from 0 to, I priced a 5-year swap this morning at 2.3. I meant to price kind of, we'll say an indicative 16 plus 2 kind of just to see, or 18 plus 2 kind of, but, so they didn't kind of. So I think we need to kind of just add little levers like that. That's not going to cost money. It's not going to add to the PSO kind of. So kind of I think those two kind of, if we want to look back and see and say we delivered under res, it needs to be tweaked kind of. For me, another opportunity is, and I'll touch on it very quickly, is just it's about kind of route to market. It's I'd like to see utility PPAs, and pure utility PPAs, not with a res sitting behind it. I think when we look at kind of onshore wind, we look at solar, they're proven established technologies. They don't have to go route to market through a sovereign support scheme. And I think again we look across the water to the UK. There's some very strong off-takers over there who are publicly saying we've designed utility PPAs which are fit for purpose for project finance. And I think if we can utilise that stream, kind of that will free up kind of government funding and government resource to look at the next stage of what we need for decarbonisation, such as hydrogen, such as kind of floating offshore, and I think that's needed as well.
Yeah. Okay. Very good. Maybe just in respect of some of those points that Eoin made around sort of tweaking the existing framework, like is there flexibility, within the res rules, say for example, for some of those movements that Eoin mentioned?
Yeah, I'd echo a lot of what Eoin said about trying to work with what we have in place already, which is really quite a positive political attitude and a positive legislative background. And really, if we could leverage and expand on what's there already within the powers of the legislation that's in place, I think that would, as Eoin said, create a lot of flexibility in the market without adding cost. So Eoin mentioned there about Res 2 and the long stop date, and I suppose the difficulties that might bring when we're trying to reach a point where we're getting as many megawatts on the grid as possible. I guess there is discretion for the minister within those terms and conditions to amend them if he sees fit, provided it's in line with a general renewable energy directive kind of ideology. But I think as well there'd be an opportunity to look at things outside of that. For example, as Eoin mentioned there, the exit from res, if you have an offer, there's really only one mechanism, one clean mechanism at the moment, and you have to be post COD and you have to give 12 months notice, which obviously keeps a project in for much longer. If they try to do it before that, there are some negative consequences for them, including missing the opportunity to bid in further res auctions, for example. And I just think between the long stop date, the exit, and then maybe looking at something like the force majeure provisions, you'd create a lot more opportunity there, and it's certainly easily done. I think some of the previous panels as well, and I know we've been talking about planning a bit, but there are probably some, again, fairly minor amendments we could look at there. Deirdre Nagle, my colleague in the planning department on the first panel this morning, mentioned the recent amendments around flexibility where you have more efficient technology. So that would obviously be really positive to see. Eoin obviously mentioned as well about repowering, and there's an EU directive that hasn't been transposed here yet, but I think we've an opportunity there as well to implement that in as flexible terms as possible and really permit those projects that are already, as Eoin says, connected in already, and ensure that they stay on the grid and continue to contribute. But the last thing that I would point out is, at the moment we have a relatively limited ability, it's really limited to strategic infrastructure developments, to go back in for a non-material development. And I think if we could look at that and look at an amendment that would maybe expand that to a broader application, similar to what you have in the UK, it would again probably free up some of the planning process, where you fast track basically small amendments to a planning permission that won't materially impact the actual project on the ground.
Okay. Yeah, and just on that planning point, Louise, you often see planning permissions are obtained maybe 2 or 3 years before they actually get to the point of talking to funders, and technologies change and things happen in the meantime. Like, is that a particular issue that you find, troublesome when you're assessing a project for bankability and doing that credit assessment?
Yes, it's
Short answer. Okay, next question.
It's a bit of a nightmare, to be honest with you.
Yeah.
We all know how long it takes to develop a wind farm project. Years, right? 5, 7, 8. I've seen 15 years for some. And of course, the constantly evolving, changing technology, right, which could sometimes lead to changes in the equipment, and that's sometimes changes in the planning requirements. And it can sometimes be very heartbreaking to see that, not even necessarily through a change in technology, something to do with the site characteristics or something, you have to change something. And as a funder, you know that's bad news, because you know that potentially the project's submitting itself to a 2-year window where it can be judicially reviewed, it can be appealed, and all these things that for us are just big red flags as lenders, and we just hate them. So I think some sort of fast track planning solution is a low-hanging fruit, something that our legislators should focus on. We know that they announced a fast-track planning process for offshore, and that is obviously very welcome. Offshore is going to be huge, but we have a real energy crisis here now. Offshore is going to take time, and there is a very large pipeline of onshore solar, onshore wind projects, which can be delivered in a very short window of time. So looking at fast-track planning for projects, I think, is definitely something that would be what you might call an easy win. Maybe not, I don't know. But and then one other area that I think is a problem, we touched on it at the beginning in this panel, it's the impact of macroeconomics, the macroeconomic environment on projects, inflation in particular. Eoin spoke about it, the way the top revenue line does no longer move in the same direction as the OPEX line. Yeah. Huge problem. So, you know, I think we all understand and agree with the imperative of keeping energy costs low, protecting the consumer, making sure energy is affordable, but trying to find a way that the macroeconomic environment does not impact the very ambitious renewable energy targets that we have from being delivered is crucial for me. So I would certainly put on the table some sort of inflation linking for RES projects, possibly a partial linking, because we know that not all the costs that they have are fixed. I think that's certainly a very interesting proposition. I see the government today, we're talking about a windfall tax on non-renewable projects. I don't know if you could call that a low-hanging fruit. I think it might upset a few of the people in this room, but you know, I think the other two, particularly for me, I think those are things that we should be focusing on as an industry to try and just streamline that process and get as many projects built in a short period of time.
Very good. Okay. I haven't heard all of that, Cyril. Like, do you still have an appetite for continuing future investment, future projects in Ireland? Do you see other opportunities? You've completed the solar projects, as we mentioned earlier on, under RES. Do you see other areas where maybe you can have further development in the market?
You know, what makes me very positive about the potential of the Irish market to develop much more than what we currently do is, to use Gabriel's words earlier today, there is a strong push for energy security and sovereignty. And whilst it was so far more, let's say, kind of a political debate, or the kind of debate we had within hotels like this one between experts and trying to bring a cleaner world, I think this debate around energy is now in each and every house, each and every pub. It is discussed in Ireland because we've suffered a second increase of electricity prices this year, right? And I think it makes each and every Irish person considering now, eventually with different eyes, what renewable energy could make, should make, need to make in Ireland to make sure we control prices and sovereignty, right? I've heard that in France, on the west coast, on the beaches this summer, I wasn't there, so that's why I say I heard. I was in Donegal, but I heard the debate whilst we had some fires in the forest and everything. People were debating about, you know, those offshore wind farms arriving on the west coast of France and how it was impacting the landscape and everything, those tiny offshore wind farms there. And I think something was missing in this discussion in France was that the increase of electricity price since the beginning of that war in Europe has been in France of 4%. So you've seen the increase of your electricity bill in Ireland, right? The last one was almost 40%. In France, it has been limited by government subsidies for the consumer at 4%.
All consumers,
right?
yeah.
I really do think that when you arrive on that same beach and you explain to those person, no, you have to make a choice, right? Either you want those tiny offshore wind farms in your landscape, or you want 40% increase on your electricity bill. Make a choice.
Yeah.
So we're discussing about ESG and having a debate about the energy policy in the country, and of course we need to respect the democracy, the debate, but we need to build something right now in Ireland through a collaborative approach about what do we want for the country in terms of energy sovereignty. And I really do think that people in Ireland are ready to have that debate, because currently they are paying the price for eventually a lack of diversification of the electricity mix into solar, into offshore, into more storage, and to continuing the policy we have been here in Ireland for already decades, 2 decades no, 4 decades in the offshore wind. So that makes me very positive about the future of Ireland, that the consciousness of the population around that debate on energy.
Yeah.
Now, what is very positive apart from the debate and the political willingness is a political act. And in Ireland, there is something which is very important, which is regular auctions delivering scale for financing, for development and for financing. So we go back to the financing point. I mean, currently in the European, in Europe in general, so we fight for, I already said that, for solar modules, for resources and for financing. It is difficult to attract banks for small tickets, for small projects. The fact that through the RES auction, we can deliver portfolio every year of projects makes those portfolio bankable, and we can develop more. The very last point, which is very interesting, we're talking about the route to market, the corporate PPAs, and there's been an enormous shift in the mindset of the corporates, which is currently opening a very big route in terms of signing, in terms of route to market in Ireland. A couple of years ago, when we're talking to a corporate, we're talking to the marketing officer of the company when we're talking about corporate PPAs, right? Now we're talking to the CFO. Now we are talking to the CFO because, again, there is a question of security of supply at the right price. And the corporate, over the last eventually 12 months in Ireland, really shift their mindset and understood that it is not anymore, we don't fight anymore to work with the big names. We've got RES, it's working well. The merchant conditions currently are good enough. So we won't fight to work for those big names, right? So they have to be good and competitive. They have to offer the right terms. So those corporates increase the duration of the PPAs. They took a view on how they can differentiate from RES, eventually offering indexation, which is not offered by RES, offering to take the risk or view on the grid connection delay, which is not offered by RES. And so there is a real new route to market in Ireland.
Very good. Thanks, Cyril. I know we're up against it time-wise a little bit now, and we're in between you and your lunch, so we'll wrap up. But maybe just very briefly at the end, Justine, having successfully closed now your first project in Ireland, does that leave you with a sort of was that a satisfactory experience? Does it leave you with a good sense of further, a desire to do further funding into the Irish market?
Yeah, well, the first one is always the most difficult.
Yes.
Because there are issues you don't anticipate, but it's also great, to work with clients who already know, like a Neoen, but it really opens the door to more, and now we know what are the challenges, we can anticipate them. We have definitely a very positive view on Ireland and RES. And, we talked a lot about RES, but corporate PPAs are also an option, financing portfolio with a mix of RES and corporate PPA assets. We've seen it a lot in other markets and, in the Nordics, and we just financed this year on a completely non-recourse basis a 20-year corporate PPA in the Netherlands. So, that's also the kind of thing that that can also be looked at in the context of the Irish market. So definitely there is a lot of appetite, and not just for solar, as I mentioned, also wind, especially maybe the future offshore wind projects, and we also actually this year we acted as a financial advisor for the Green Link interconnector, which is also the type of things in
very important strategic project in Ireland. Yeah.
Exactly, it was a key project for us, and actually our colleagues from AIB acted as lender as well. So really, there are so many opportunities, and I think the fact that we keep on closing deals on the island, different types of assets, shows that there is a strong interest.
Yeah. Look, I think we'll release everybody to their soup and their sandwich, and remains just for me to thank the panel, to Eoin, Cyril, Justine, Louise and Muireann. Thank you very much for your contributions. It's been really informative. Thank you. Yeah.